and this is my friend. There's bears everywhere in the studio. Okay. Oh yeah.
Cool, nice.
Oh, and also, he said Pallantier.
저 인트로 다시 한 번 하면 안 돼요, 부장님?
Nope.
AI는 뜨겁고 SMR은 출렁이고 테슬라는 또 한 번 시장의 시선을 이끌었는데요. 그래서 하나프렌즈에서 귀한 두 분을 모셨습니다. 오늘 함께 하나프렌즈 소개합니다.
Hi, I'm Dan, and this is my friend.
Hi, I'm Seth, the worst dressed on Wall Street.
Oh no, that's not true.
Welcome back, Dan. Pleasure to meet you, Seth. So I think we have a lot to update in like Tesla, AI, or like SMR and so on. So let's get started.
Great. Well, I know, Dan, last time when you were here was this February, and then at the time you said the AI party is just about to begin, which could last until 4 a.m. in the morning. What time are we on now? How long do you think the AI bull cycle market would last?
Action!
Okay, so we are at 10:30 p.m.
Okay.
It was 9 p.m.
Okay.
Party still goes to 4 a.m. And look, there could be glass on the dance floor. The DJ could stop playing music at the party. Maybe the cops come to the party. But the reality is that this AI party is going to 4 a.m. We still have 2 to 3 years left in this tech bull market.
Do you have any comments to add on Dan's, maybe? Or do you have different perspective?
Yeah, the bottom line is that there's still a huge CapEx cycle, a huge earnings cycle ahead of us associated with AI. It could last 5-10 years, but at least 2 years, the way we think about it, especially when we compare it to the dot-com bubble, where in 1996, Alan Greenspan said that the market was irrationally exuberant. The market rallied for another 2+ years after that, and we see the same thing happening right now.
Okay, well, I'm so glad that you brought up the dot-com bubble because we're going to talk about that later in next questions.
One of the biggest key themes in the US stock market now is the CapEx cycle, as you told. So do you remain positive on the CapEx cycle going into next year? And also, what can be the potential catalyst that can drive the further upside in the near future?
Yeah, absolutely. We see upside to CapEx spending through 2026. We think that we could see some consternation as initial guidance gets set for CapEx going into the year, but ultimately we'll end up with CapEx significantly higher than initial guidance. So if we think about 2025, this point last year, people were looking for CapEx for the Mag 7 to be in the 250 million range. We're going to end up 380 or so. Going into next year, initial expectations could be around 450. It could easily be well over $500 billion. So that is a huge amount of money and will be propelled through spending on data centers and building out AI use cases.
Moving on to Tesla, since Koreans represent one of the largest among the foreign investors, I think we have to have a deep conversation on Tesla. So then are you ready for this? Sure. So fundamentally, how much value do you evaluate Tesla's energy segment, especially the ESS, within the total enterprise value? And also, I wonder your projections on your ESS sales in the near future, considering the data center demand.
Yeah, the street could really care less about the energy business for Tesla. The reality is that the future for Tesla is about autonomous and robotics. It's an AI play going forward. We think the autonomous value is worth $1 trillion alone. And look, some of the parts, you talk about the energy business, that's just an upside. Because right now, street could care less about it. As that storage business, the energy business ramps, that could even be just more upside to the story. We think $1 trillion for autonomous, $2 trillion for some of the parts on Tesla, and in a bull case, it's $3 trillion as we go into late 2026. They are entering their most important chapter of growth ever.
Some kind of the Korean battery company size, U.S. poses the high tariffs on the China battery, and also considering the fact that Korean battery companies doesn't actually have enough capacities in U.S. So do you think it can pose some problem about Tesla's battery sourcing?
I don't think so. I don't think that that's an issue relative to supply, relative to what we see in China, which is 45% of sales. They look, you've had stable demand, especially this quarter. And now, really, the important thing for Musk and Tesla, it's driving the future, which I view as the physical AI future. That's what you're playing for in the stock. If you're playing for storage, energy, car deliveries, then you're in the wrong coffee shop. The reality is that Tesla is focused on autonomous.
Well, speaking of Tesla, Dan, which car do you drive back in New York? I mean, I personally drive Hyundai Tucson. What about you? I know you're
Tesla.
rooting for Tesla.
I mean, I have other cars as well, but I love driving my Tesla.
Okay, so you do have a Tesla too.
Oh, of course.
Oh,
I mean,
nice,
look,
nice.
Yeah, Model Y. Because the reality is that I think a lot of people, until you actually drive a Tesla, you don't understand the experience. You know what I'm saying? And that's the thing. And it's like, I think they've built something very similar to Apple built on the iPhone. It's just so rare, and that's part of the ecosystem.
As you've been mentioning in different interviews, you're saying that Tesla is likely to make money on software-driven based models, which, thanks to their automation levels, is improving. How low do you think the average selling price of EV is gonna go in long term?
Look, I think low 30s, 30,000 US. Look, without the tax credit that pulled, that would sort of be the price points. Okay. But for them, it's all about FSD penetration. But the most important thing is, it's really, the future is less about car deliveries and more about driving the robotaxis, autonomous, and ultimately robotics with Optimus. That's why I believe in terms of physical AI, the two biggest and most important names are NVIDIA and Tesla.
Full self-driving level 4 should be deployed in Austin by the end of the year. That's an important proof point because that technology is going to propel the autonomous driving. It's going to propel the humanoids going forward as well.
In a year or two, like, he'll be driving the Tesla, okay? Yeah. And that's the reality, like front seat, be back, and that's where it's all heading.
Thanks for pointing out. Do you agree that Elon Musk is the next Steve Jobs?
It's a tough comparison. Obviously, just given Jobs and Musk are two totally different people, two different companies. I think, and Musk is a wartime CEO driving this future, historically will really change society. Steve Jobs, same thing. So I think even though they're different in a lot of ways from a visionary perspective, they're similar. I say the same thing for Nadella, as well as the godfather of AI, Jensen, and NVIDIA and what they're doing. But that's why, Steve Jobs continues to be what I view as like the top of the mountain, and that's what every CEO looks to strive for.
I need to talk to Seth about the AI bubble. So earlier of our conversation, you mentioned the positive stance of the AI bull market cycle. Many AI companies today, however, I believe that they still lack clear revenue models, pretty much similar to what we saw on dot-com era. My question is, in your view, what fundamentally differentiates today's AI valuation environment to that speculative pace?
Yeah, well, first of all, the CapEx boom that we're seeing right now is led by the hyperscalers, and they have a clear earnings model. In fact, almost all that spending is driven by free cash flow, really strong fortress balance sheets. Back in the dot-com bubble, that was not the case. It was driven by leverage, and that blew up in everyone's faces. So that's a clear difference between today and the dot-com bubble. And as we look at the future going forward, the revenue model, the earnings model associated with AI, data centers, use cases is getting clearer and clearer, and that's really what's going to set this cycle apart. So I think that we'll look to 2026 for evidence of use cases being monetized, and that will take the stocks to the next level.
Shaking his head. Agrees. What agrees with what Seth is saying.
Got it. Oh, okay. Well, let's just pretend that today is actually the bubble. What indicators would you?
We have a bear somewhere in the house. There's a bear. Okay.
Okay. Well, what indicators would you watch to know that when euphoria has turned into the excess?
Yeah. Well, first of all, valuation doesn't pop bubbles, and valuation for tech stocks is not even that high, especially relative to 1999 when they were trading at 30 times revenue. Today they're trading at 25 times times earnings on average. So what factors are we watching that could indicate euphoria and a bubble about to pop? Well, certainly earnings. If earnings disappoint and we don't see the monetization occur as expected, then that would be a big negative. Secondly, if we saw a big drop in the CapEx cycle, that would be concerning. So I'd point those two things as the ones that we're watching most closely.
So I have a follow for Dan. I think Oklo sits at the intersection between AI and also the power thing. So even if in the worst case AI turns out to be a bubble,
there's bears everywhere in the studio. Okay.
So do you think that Oklo can survive by the Trump administration pro-nuclear stance?
We are in a fourth industrial revolution. The energy needs are massive in the U.S. Nuclear, it's going to be a nuclear, really super cycle, and that's going to be led by ACO. I mean, in my view, we've talked about ACO is going to be the de facto standard in the U.S. To start, there will be other beneficiaries, but you have more data centers under construction today than active data centers. And that's why ACO, look, there's been skeptics, obviously, just given the stock's run, but we continue to believe. I mean, it's a core name on our IVES AI 30 list, and I believe this is actually just the start of this next phase of the build-out in nuclear.
So there will be a third quarter earnings soon. So what is the key point to watch?
It's less about, because they have no revenue, it's really all about what in terms of what they've won from government contracts on the different build-outs, building out the roadmap, time. It's all about time on a name like ACO. But again, the bears, they can see this in the spreadsheet and when they're in their hibernation mode. And that's why they continue to miss the transformational growth names like Palantir, like ACO, like NVIDIA, where they're talking about valuations, and they've missed every transformational growth stock the last 20 years.
The price for Oklo has been tumbling these days. What's your target price for Oklo?
Again, tumbling. I mean, the stock gone from 10 to 130. And we view it fair value as 175. For Oklo, 150 base case. And anytime the stock sells off, we view as an opportunity to own what I view as a core AI name.
I'm going to ask only one question for the Palantir. For the investor who are considering Palantir today, what would you point as to the critical point or sign that the signal that the business have moved into the next pace of scale?
It's already happened. I mean, that's why I think it's going to be $1 trillion market cap next 2 or 3 years. Just given in AI, they really own the use case. Alex Karp, there's no one better out there that really understands the data set. And now the commercial business could ultimately be a $1 billion business from what was less than $50 million a year ago.
Seth, could you recommend your preferred sectors beside AI? It could be bio, energy, really up to you.
Yeah, certainly. One of our other favorite sectors is biotech within the healthcare area. So biotech has very moderate valuations, nowhere close to all-time highs. And the big pharma companies are facing $200 billion of patented drugs that are coming off patent by 2029. They're going to replace that revenue, and that's going to lead to a flurry of M&A activity in mid-cap biotech. So that's one of our favorite areas. The other area besides AI specifically is related to the power up of AI, data center build out, energy, et cetera. And we talked about Oklo. There are other plays within that, Nebius being one that we like, Willdan being a smaller cap name that we like there, G, Vernova. That would also be an area that we like. And then thirdly, I'd point to pockets of consumer discretionary. Areas that are levered to lower interest rates will drive consumer to invest in homes, consumer to invest in big ticket durables. So home builders would be a sector that we like.
Maybe favorite stocks for the biotech you could share? Would you like to share?
Yeah, Argenx. We'll put Argenx top of the list. Large cap name. And then RBMD is the other one we like.
Oh, okay. So for U.S. tech, do you think Korean investors right now are bullish, bearish, or concerned?
I think it's really 50-50 because one of the key things is the capex cycle right now. So that's the worry about thing. But I think many Koreans invest U.S. stocks so much. So maybe that kind of thing can be their wish to go upside. And also, considering that.
And let's pretend that we have $1 million could you pick only one stock that would you guys are willing to buy next year? It has to be just one with that $1 million. What would it be?
I mean, to me, it's Tesla.
Tesla.
It's not even a question.
Well noted. What about you?
Microsoft.
Microsoft. Microsoft,
Like it.
everyone. Ooh, nice.
Oh, and also, he said Palantir.
Palantir and Microsoft and Tesla. Got it. Do you guys have any other comments that you guys would like to share lastly on Hana TV or not?
I have one comment. Why are nudists bad for stocks?
Why?
They're associated with bear markets.
Bear market. Bear markets.
No nudists around here, no bears, only the best dressed man on Wall Street. Danny.
Nice. That was Danny.
Thank you so much.
Thank you so much, everyone. Thank you so much, gentlemen, for making all the way to Hana TV and sharing your perspectives in our channel. It's amazing to have you guys again in our channel. I really appreciate it.
Thank you.
Thank you.
해외 주식은 역시 하나증권이죠. 오늘도 뛰어난 애널리스트 분들과 유익한 시간 가져보았습니다. 함께 해주신 애널리스트 분들 모두 감사합니다. Shall we say it? Hana friends. 안녕.
안녕.